Welcome back, ladies and gentlemen. We are live. I figured I'd just take a few minutes. I got another meeting at 6, but just when you thought it couldn't get worse, oh my God, Microsoft just posted earnings down 7.49% in after hours. And just check these numbers out because, it's so reminiscent of Netflix all over again. I mean, their 2Q revenue is 51.7 billion against the estimates of 50.8 billion. Their cloud revenue was 18.33 billion against 18.32. I mean, their Xbox sales were up 10%. I mean, everything just giddy, right? But then you log into the old forums and you're like, hey, what's going on with the after hours then? Why is it trading down 7.5%? Well, damn, who the hell knows right now? This is a pretty wonky ass market. It's been a wild ride, and I love the campaign. I mean, me Kevin's really good at keeping himself in the spotlight, going on this crazy campaign all day on all these different YouTubers' channels. But we should talk stocks real briefly because today's the first day I actually started making big moves in my account. I did sell some of my real estate stocks just because I still think financials are going to outperform. Now, obviously, there's no guarantee, but luckily, since I've made those pivots, I'm actually up on the day. Not that I really care because we're one day into this, but I did sell Granite Real Estate Investment Trust because it was a relatively new purchase compared to say Stag Industrial. So I ripped it for no loss or gain. I did make some dividends on it, so the tax implications are null, and I completely pivoted that over into Royal Bank, kind of upping my bank positions with Canadian Imperial Bank, Bank of Nova Scotia, TD, and Royal Bank. My weighted positions, I got to double check right now to see what my total exposure is to the financial sector. But if history says anything, this market's a pretty easy play. I mean, a lot of us are long-term investors, right? But the fact of the matter is, historically, every time this has happened, the same companies have always done well, and that is your financials, your gold, your commodity stocks, your healthcare stocks, which ironically are trading down a lot, which I pointed out this morning. Kyle, are you having cash for Tesla? I'm not probably going to be buying that much more Tesla. I did pick some up this morning. I wish I grabbed it yesterday when it hit 850, but I was still a little more skeptical to see how far that sell-off was going to last. But this is the time, man. This is the time to be buying, to start cost averaging in. I mean, forget Meet Kevin liquidating his portfolio. Damn, if you have some interest, this is the time to take note and start picking up these dips, right? I mean, Microsoft's now what, 15% down from its all-time high? Yeah, I mean, 15.46% into the close, knock on another 7% here, or maybe it was a 7% into after, no, about 5% into after hours. So, I mean, we're getting deals right now. Are you going to add? No, I've got way too much Microsoft. I'm pretty good with my Apple and Microsoft positions. Very happy with the business and how they're moving forward with the hopefully moving forward with the Activision deal. Everything Xbox is doing is perfect to me. I just don't want to be buying too much more of it. Sell, sell, sell. I'm buying Microsoft at 200. Yeah, we'll see if it dips that low, man. I'm curious to how far this market can realistically drop. I'm very curious because I've noticed that when things get too low, people like myself, a lot of hedge fund investors are starting to pick deals up. I mean, Tesla at 850 got gobbled up like candy, right? So I'm curious to see if it could dip well below the 800s and we see like a full blown bear market where we're seeing like, companies like Tesla and Nvidia, drop 50% or something like that. I honestly don't really care what happens either way because I think the funniest thing about these markets is for most people, it's supposed to be passive. But all of a sudden, when this shit happens, all of a sudden, every passive investor becomes active. And I'm like, and the only active thing I'm primarily doing is buying. When will you pull the trigger on BABA? Same reason I'm not pulling the trigger on small caps yet, man. Same reason Meet Kevin selling small caps, man, is because the trend has not changed yet. Like I said, I don't care if I see small caps or Alibaba pop 50%. I would like to see that confirmed pop before I buy into it. Cause I mean, those companies can be trading down for the whole year. We're heading into a risk off environment. So like I said, I've got tons of stocks on my watch list, but what am I willing to buy? What I know works. And I'm always got money, man. I mean, I'm just finishing up with the accountant tomorrow. That gave me a little bit of confidence in probably what my cash position is going to look like, but I got cash laying around now. So I'm like, I might as well put a little bit of it to work. I also bought the Vanguard S&P 500 index. I'm probably going to keep buying a lot more of that through these pivots and this kind of kangaroo market of these ups and downs. I haven't done much during the correction, just averaging into quality at good prices. Yeah, that's, I mean, that's what we do. That's what we do, baby. We just keep buying a term Tourmaline Oil. Yeah, what are you guys buying? Are you guys picking up some of the commodities plays here? I'm very interested to see how oil performs through this mess with a lot of the Russian stuff. Russia has a lot of control over the oil market, and their economy only does well when oil does well. And considering a lot of the tariffs, or not tariffs, I guess sanctions that a lot of the European Union and the U.S. said they'll put on Russia if they attack, could really lead to some turmoil in the oil markets as well. Enbridge held up great today. Yeah, what is Enbridge at? Like I said, I don't play commodities as much, but you can't help but look at gold holding up here incredibly. I mean, a lot of these small cap gold plays are the only places we're starting to see these kind of early rebounds right now. I did buy gold and JP Morgan. Yeah. I mean, I'm not, like I said, I'm not diving into like the precious metals themselves, but I am paying attention to a lot of the smaller cap gold companies. And like I said, my plays right now are the banks, which come with their own risk, to be honest. I still feel like if we see a wicked recession come into play this year, I'm kind of taking on a little bit more risk than you might be, say, with the gold producers or the commodity guys. Because I mean, if the real estate market goes, I fear that the banks might go with it, because obviously the banks are heavily poised on what happens with real estate. But even still, interest raising environment, the banks have been very stable through this. Yeah, Enbridge looks like it's trading up here. It jumped up a little bit on the bottoms from yesterday. It's up 4%. So Enbridge doing pretty good. What's the yeah, I mean, Enbridge has recovered nicely from those bottoms, up 40%. I mean, from the midst of 2020, 2021. Do you think Split Corp stocks amazing? What do you think of the Split Corp stocks? Amazing dividends. I don't mess around with them too much, to be honest. What's going on with GTXO? Saw you did an interview with them. GTXO. GTXO, is that the GTX Corp? So GTX Corp, I don't do interviews on my channel with them. Okay, so this is kind of funny. I've noticed people have been throwing this stuff at me lately. In my other business, my real job now, the real job that I have, I actually manage about 40 or 50 different clients. It's a huge amount of companies. So in between these videos that I'm posting here on YouTube, I'm actually working with all of these companies in all these different sectors, from psychedelics, the medical sectors, gold, precious metals, companies like GTX Corp. Some of them have done amazing. Some of them are getting absolutely slaughtered here. GTX Corp obviously being one of them, but I don't have any personal stake in them. I just mitigate interviews. So I literally just kind of get hired to come in and I just do a quick interview and do some Q&As with them. It's actually a lot of fun personally for me, because like I'm getting involved in some like crazy huge companies that are doing like these really I get to moderate even things that aren't being like YouTube live. So moderate like some of these Q&A for conferences, like their Zoom conferences. Really interesting stuff for me. But I try and separate my businesses, because I don't let my personal YouTube bleed into that, because of protecting myself and just trying to keep my corporation separate from what I do with those guys. But yeah, I don't talk about that much. That's the real job. I just have fun fully involved in the markets from many different aspects. It's a lot of fun. MyMed had a fantastic day after the FDA news. Yeah, to move forward with some of the stuff they're doing. Yeah, that was pretty big news. We need a bigger jump up though, man. I mean, that to what was like a 20% bump after going to like 90 cents. Like we need to recover back to those $4 or $5 ranges. But here's what's going to happen in the medical sector. Right now, I guarantee you, everybody from Pfizer to Moderna, I don't care who you are, if you got cash in the bank, you're looking at these small cap plays right now. I mean, this is the time where I wouldn't be surprised. I don't know if MyMed would go through a transition of being sold or bought out right now, but I guarantee you're going to see a lot of small cap biopharmaceutical companies get gobbled up in these ridiculously reduced price rates. I mean, that's typically what happens right now in pharmaceuticals, is consolidation. GTX, he says that the interview, PPE sales through the roof. I'm assuming next earnings should be good. Looks like a good entry point. Yeah, it's just that the stock has been so hammered, man. Those guys have been trying so hard, and they've been dealing with some of the supply constraints as well. They're very interesting and diversified, but also small cap, right? So they're kind of thrown into this small cap crushings. Hey, Kyle, what factors do you use when deciding whether to invest U.S. dividend stocks in TFSA or RSP? Doesn't really matter. I don't really decide that anymore. I kind of just buy with whatever money I have. I don't really care about converting currency anymore, because like I have a residual stream of US dollars that come in and a residual stream of Canadian dollars that come in. And to be honest, I wish I could easily throw the USD into the RRSP, but I can't do that as freely. But I've maxed them out, right? Like I've got about $10,000 or $15,000 in contribution room for the RRSP, but honestly, if I like U.S. companies or I just want to buy the Vanguard S&P 500, I'm going to convert the CAD over no matter what. But there's no decision whether I do it or not. I mean, the currency conversion doesn't matter to me. I just, if I want to buy U.S. stock, I have CAD, I'm converting it. If I want to buy Canadian stock, I'll probably use my Canadian currency. But my primary goal is to constantly keep the money divided, and I've done a good job. That's taken a long time. I can't express the amount of accounts. I think I ran the math or something, and I have like 13 different accounts between the Canadian and US accounts that I'm currently running, because it's just so hard to keep USD in US dollars, because everybody wants you to convert it. They make it one hell of a bitch to keep your money separate, so they can charge you those conversion fees, right? Rob Barrows stated in a recent interview that he's had multiple meetings with big pharma CEOs and that all eyes are on the sector. Yeah, that's what I'm saying too, right? Like it's weird that like I said, I have a hard time buying into the pharmaceutical sector because I don't understand it very well, and it's very dependent upon what the next big drug is to them. But at the same time, I mean, Pfizer's not going anywhere, Moderna's not going anywhere. Some of these are like the most foundational, like dividend aristocrat companies, right? And they're trading down a lot, considering they typically do very well in this kind of a market. So they could be very intriguing dip buys. You like crypto? Absolutely. I still consistently cost average into crypto with some of the promotions and stuff, but I'm not pumping it as hard lately. Um, because obviously, like in a risk off environment, I'm really curious to see how crypto performs, and it's doing better than most of the market is right now, which is surprising because I mean it dipped down to 30K and then jumped right back up and is holding up fairly well. But I'm still bullish on crypto long term. This, guys, doesn't matter. It doesn't matter what I'm bullish or bearish on. This is a buying opportunity right here. I mean, this is what everyone waits for. It's not even a huge sell off unless you're into small caps. So as we see the large caps kind of take it. Take the sell off, take advantage, man. Like I said, I bought Tesla at 917 this morning. I sold Granite to buy Royal Bank. I loaded up, man. I think I bought 5K worth of Royal Bank. I bought the S&P 500 today, though that's probably going to go lower. And honestly, if the market dips lower next week and the week after that, I'm still going to my job. I still don't have any debt. I still don't have any issues in my life. So I'm going to keep buying into this market. I just can't. I just think it's funny, man. It's just crazy how much everyone becomes a day trader when the market becomes highly volatile, right? And I love it though. I think this is the most entertaining shit ever. I live for this stuff. I'm so emotionally detached from it though. I think that more people are. Why sell Granite? Because I sold Granite because it's a newer investment. I already have Stag, and Stag is a way larger holding than Granite is, even though they're kind of the same company. But I'm like flat on Granite. It went up like 10% when I bought it. It dropped back 10%. I just think that the financials are going to do better in this market. I just don't want to be buying heavily into REITs when there's a lot of fear around Amazon, a lot of the logistics stuff. I still think they're going to do great. Don't get me wrong. I think Granite's going to be a great long-term hold. Like I said, I'm not like doing these massive movements. I mean, I'm still bullish on the sector, right? Or I'd be selling Stag. It's just a matter of, I just do little things, man. I'm not like Meet Kevin where I'm comfortable liquidating my whole portfolio here. If I just see something where I'm like, hey, I'd rather that be over here. I want to consolidate. Granite wasn't a big position. It wasn't impactful. Granite, even if Granite ran 100% tomorrow, do you know the percentage weighting it would be on my portfolio? Like what, maybe like 1.5% at most. So I'm like, why hold it when I can just double down on the where I'm more confident in the macro? Not that it matters. I mean, it doesn't, like I'm speculating when I do this, by the way. I mean, it's kind of important to recognize that. How much REIT exposure do you recommend? Whatever you're comfortable with, man. I think some of the REITs are trading down right now, and I think they might continue to if interest rates get a little wonky here. But it's just your personal preference, man. I mean, it's what Meet Kevin keeps saying, right? He's like, I don't know why everyone's so mad at me. It's just like, I told you not to do what I'm doing, and I'm like a highly risky investor and all this stuff, right? It's just like, don't do what I'm doing either. I just do what works for me. And like I said, I built my portfolio over time. When you look at my portfolio, guys, it didn't happen overnight. I mean, I spent like literally several years building out all of these sectors, and I continue to add to them. I mean, I've been holding on to Apple forever, Microsoft forever. I mean, these banks, I've been in them since like the OG days, my OG days, which was probably a good like 6 years ago. So, I mean, it's not like I just came up with these allocated weightings. I just figured like every year I would focus on a sector, I'd build some companies up because I like making an impactful difference, right? Like I don't want to diversify myself into an ETF. If I'm going to do that, I'll buy the S&P, which is what I do, right? But if I'm looking for growth and I want to outperform, I mean, you have to pick a few companies and put in enough money that it makes a difference. And in my portfolio at scale, I need 10, 20, $30,000 in a company now for it to make any difference if it goes up or down. So if I'm going to make like highly concentrated bets and I've only got 5,000 saying Granite, I'm like looking at it like, what am I more convicted toward right now, Granite or Royal Bank? And in the macro, I think Royal Bank could potentially do better, right? Listen, stocks only go down in this market. You like Amazon at this price? I do, but I don't have enough money right now to drive into it. Um, yeah, see, I like Nvidia too here, man. I mean, Nvidia's good, Tesla's good. I like Facebook a lot here. I'm thinking about buying some more Facebook still. I just had a decent little check come in, and I'm like, Tesla, every time I go back down the Tesla rabbit hole, I always get far too bullish on it again. You want to make money in 2022, just short everything except no, you want to make money in 2022, go out and get a job. That's the markets are passive. That's how I made all my money in the stock market, was doing nothing. I made all my money from my job and working and actually trying to grow my income. And I think that's where most people's attention should be right now, is finding an extra job so they can cost average into this market and get those outsized returns when the market rebounds, whether that's a year from now, whether that's a month from now, whether that's tomorrow after the Federal Reserve meeting. I mean, at the end of the day, you just need as much as you can get your hands on, unless you're Meet Kevin and you have $20 million. I mean, unless you got 20 million invested right now and you're trying to build your portfolio, I'm sorry, $10,000 isn't going to do shit. I don't care how you invest 10 grand. It isn't going to do anything. It's just so null in comparison to where you should be going over the next 5 or 10 years. And unless, like, there's only two people that need to be worried about this market going down: if you are highly leveraged into risky investments, or you're at retirement age. If you're at retirement age, I'd be really worried about my portfolio and how I have it allocated. And I'd be really worried if I was highly risk on invested in this market. I mean, you guys, like, at least Meet Kevin sells out, right? And says, hey, look, like, I'm worried. I've been telling people to be worried about small caps for a long time. This isn't new news. I mean, newsflash, folks, a lot of your great speculative SPAC investments have been selling off for a long time. It's not like this is new. So, I mean, why try and buy a falling knife, right? It's lasted a year. I mean, look at things like, it's just crazy. Like, these small caps have been selling off for a whole year. It's just finally large caps have kind of caught up to the sell-off, right? So, I mean, there was a guy making fun of me today saying, "Oh, this guy's never been through a market bubble bursting." He's like, he doesn't even know what he's talking about. It's just like, bro, what part of the market are you looking at? I mean, the market bubble is bursted. I mean, it's definitely bursted. I mean, what stocks do you look at? Because I mean, if you've been involved in anything related to Reddit, your bubble's bursted, baby. It's just a matter of, if you've lived in the world of ETFs, these 8 to 10% sell-offs don't matter. But the fact of the matter is if you're trying to outperform the market and you're buying individual stocks, you're going to be a little bit more worried about what you're doing here, because you got to be careful, man. I'm fine with my Apple and my Microsoft and my Tesla selling off, and same with my Facebook, right? Like Google, they can all sell down. I'm actually excited for them too, because I've been in them for so long. Because I want to keep buying them. Like, honestly, those are the kind of companies that I'm looking by 2030. Where are they going to be? And the fact of the matter is there's just not a lot of foundationally good companies right now for big hedge funds to run into. So the thing is if you can put a list together of these triple A rated companies with these absurd unbankruptable balance sheets, and they sell off 20 or 30% here, guys, it's just an inevitability of amount of time when those companies are just going to come flying back. And I don't want to speculate on when those companies come back, because I'd rather buy them. So that's why, like, I don't mind taking on more risk with Tesla or Facebook, or if you didn't own Apple or Microsoft, this is where you want to start. If you're looking into small caps, however, where you think there's some robustness, or you're looking into some of the risk on investments, like I said, with Alibaba, with some of these smaller caps, maybe like Hyliion, or I mean, there's tons of them, right? Like SoFi, Lemonade, all your Meet Kevin stocks, all your Reddit stocks, all your YouTube stocks. Those are the companies where you want to make a list and you just want to wait. You just want to wait. Just wait. Just wait till there's some really good comfort in the market and we start seeing a correction in the other way. It's the easiest thing to do, man. You get paid to wait. That's what you're doing right now. Is if you're looking at those risk on investments, you're literally getting paid to wait, because they just keep going down. So why put money at risk when you don't have to? Are you a buyer of UPST Upstart? Upstart's another one of those probably relatively good small caps that are getting wrecked. I mean, Ouster, am I saying that right? That's an interesting play right now. I'm also looking at Polestar, which is a SPAC that's going to be coming to market. That I'm very intrigued to look at because I think Polestar is going to be manufacturing in the US. I think it's going to be one of the biggest competitors to some degree to Tesla. That's another interesting one. I mean, there's a whole list. I could go through a whole list of these things, but it's just a matter of why buy them right now. Let's take a look. Upstart. Oh man, Upstart's $7 billion company, so it's mid cap. I mean, it's trading down 74% from the all time highs. Yeah, it's just one of these things, man. Like, add it to your list. Kyle, do you think it is a bad to have only U.S. stocks in a TFSA? No. If you only like U.S. stocks, by all means, just be aware that you are getting hit with that foreign income dividend tax. So you pay a 15% withholding tax. Whereas in an RRSP, you don't pay any of that withholding tax on most companies. So I kind of divvy up my TFSA between US and Canadian companies. But if you're only looking for growth in your TFSA, I mean, it doesn't really matter if you're buying things like, that are paying small yields like Apple or something. But no, it's just your personal preference, man. I honestly, I think US stocks are fine if that's all you want to hold in your TFSA. It's just a matter of personal preference. Why are you in the shower? I'm actually in my room. I just got out of the shower, gave myself a haircut. I look like trash. I'm still recovering from food poisoning. I'm actually just in my room. It's just that, this backdrop of cards and everything. I don't know if that's most appealing. My backdrop isn't like the most. I got to clean shit up in here. I know I can't green screen the YouTube. I got to pay for StreamYard and actually set this up properly. But yeah, man, I'm actually surprised at how good I feel right now because God, I was dying last night. I mean, I'm like day 3 into food poisoning recovery. It's been brutal. So I've been wanting to build my dividend portfolio. Do you think Apple below 150 and Microsoft below 270 beats buying the Canadian banks, Starbucks? See, here's the problem, right? You don't know over the long period of time which of those is going to do better and which are going to underperform or outperform. Because it's just like you look at the bank performance in this period of the market. Go look at oil. I mean, oil stocks, like I said, I'm not a fan, but you've got to recognize the recovery against this market sell-off those things have had. So it's kind of understanding the diversity because like this is the hardest thing, right? It's just like you have to pick sectors that you think are going to balance each other out correctly. This is why you don't want, like Kevin O'Leary says, like all of your portfolio exposed to one sector. Like if I was all tech right now, I would be getting kicked to the ground. Like it would be so painful to the point where I can't handle that kind of volatility and that risk. So for my personal risk tolerance, I'm not going to do that, right? So I'd rather give myself better diversification and it's a tough debate, right? Because if I went all Apple, I would have done so much better than just buying the banks, let's say. But then again, I sold Apple and I bought the banks at the bottom, and I feel like the bank position that I took on last year might potentially start outperforming these big tech stocks if they sell off too much. It's a balancing act, man. The whole point of dividend investing is for stability and passive income so you can consistently invest into the market, right? So when you're making a dividend portfolio, I'd be less concerned about outperforming the market per se than I would be about stabilizing the cash flow and ensuring that I'm diversified in longevity. Because usually when it comes to dividends, you want to come back in 20, 30 years. You don't want to have to be worrying about companies in the midterm. So I mean, you could throw Apple and Microsoft in that basket for sure, but I'd also be looking at things like the Canadian banks, like Pepsi, like Starbucks, like Procter and Gamble, like some REITs, for example, like Home Depot, Walmart, Costco, just things that you don't have to worry about. Because that's why I feel so good about this market is because I'm like, shit, the market's finally selling off. I have this incredible income. Like I'm still probably going to make 6 figures this year. I've got this great dividend income. I'm going to make like $8,600 in dividends this year, $700 a month. I mean, like all of this constantly compounding at this point year over year. By the time I get into my mid 30s, my 40s, like it shouldn't be unexpected to be close to $1 million plus, right, in asset value. Because like I've been trying to fast track my retirement, right? And I'm kind of looking my primary goal right now is I'm trying to look at everything about where I want to be by 2030. By 2030, I'll be like 37, 38 years old. And in that time period, I think it's just going to be where we're going to see the real advancements in some of the investments theses that I hold in a lot of these companies, right? Like I think Facebook becomes a better play by 2030 than it does now, if the metaverse stuff works out. Like when we're talking about crypto, NFTs, obviously VR, AR. I feel most of these companies like Tesla are 2030 plays. they're just, who cares what they do today, right? Like what we're going through right now, guys, is going to be a cyclical bump. I mean, just it comes back to the point, like just zoom out on the stock chart, man. If you zoom out on the stock chart, like you don't care about this shit 5 years from now. This is just incremental jokes. Have you ever given your thoughts on dividend growth ETFs? Like, yeah, I've actually been looking more at them for my parents. My parents are heading into retirement, which gives me a very interesting outlook on the market and trying to figure out how to properly diversify a large amount of capital for somebody that's looking for stability over, let's say, growth or a few other, risk on kind of ideas. And when I'm thinking about a larger portfolio set that's going into retirement, there's a few things that I consider. First of all, you can't know everything, so you're an idiot. So don't invest all of your own money. I think it's wise for somebody that's into retirement to have somebody else manage some of their money and make sure you know how they're managing it, just to make sure that you're not over or under diversifying in certain things. Take some of your own, manage it. And I would be looking at more or less ETFs, and I'd be looking at these kind of dividend growth ETFs from Vanguard, looking at more stability with global market index funds. Because once you get to that age, right, it's the same thing with building a dividend portfolio. It's like you're going to care less about the growth and like how much you can collect all at once. It'll be more about the stability and the less volatility. So you're just ensuring that you're getting that paycheck every month without, blowing up your account because Tesla dropped 30%, right? Like, you don't want to have to worry about that shit in retirement. So you're also going to look at like assets that are outside of the market, like probably private mortgages, anything that cushions you against the volatility of the stock market itself. So you want to look at some third-party assets. I wish I could put crypto in that basket, but I'm not too sure how comfortable I would be leveraging my parents' money into crypto as a retirement hedge. Maybe some gold stocks, but then the problem with gold stocks is you end up in the same boat where you're not making cash flow. Well, you wouldn't make cash flow buying physical gold, but if you wanted to buy the gold stocks as a diversification hedge, the problem is if the market sells off, gold stocks sell off with it, right? So, I mean, that's what we're seeing right now. Like gold is still over 1,800 an ounce, but most of these gold stocks are bottoming out. Like they're just starting to bounce back off some lows as people get more bullish on this kind of interest raising environment. That's the same thing with REITs, right? Like I think for some degree, you'd be better owning individual real estate or private mortgages than sometimes you are per se owning REITs, because REITs don't have any conclusion to the underlying asset value. Would you be all in on Tesla if you were 20? Um, Look, depend. Okay, look, this is like such a hard question, man. To be all in on Tesla if you're 20 depends on how much money you have. If I'm 20 years old and say I have $100,000, hell no, I would not be all in Tesla. If I'm 20 years old and I have 5 or 10,000 and I see Tesla dip like this, hell yeah, maybe I'm going to take a $10,000 slug at Tesla here, right? Because like it's so hard to tell somebody how to invest because it's so interpersonal depending on where you're at. Like when I was 23 years old and I first started investing, I held two stocks. I held Canopy Growth Corp and a company called Northland Power. If I dump all of my money into those, which I did at the time, I did exceptionally well. If I had the kind of money I had now back then, hell no, there's no way. If I knew what I knew now, I think it'd be ignorant. Because the thing, like that's the hardest thing to understand, right? Is if you're 20 years old, you can take on a lot more risk. But the problem is if you have a lot more money, you don't need to take on as much risk because you have a longer time horizon, which means less risk, but your reward has longer to compound. So it's such a weird, like in my head, you're just kind of looking at all these dials and knobs and bars going up and down, and you're trying to figure out, what's going to suit your best circumstance. And I don't know, man. I can't tell you that. Nobody on YouTube can tell you how to invest. And copying a portfolio is something noob investors do because you don't know what you're doing. So you might copy me, Kevin, and get pissed when he sells off. Or you might get pissed at me because you might be buying some of the companies I'm buying, and those are all you hold is Facebook and Tesla. And now you're down on them because Kyle's like, oh, he's so bullish on them. And now they sell off. And, Facebook's down pretty substantially. I mean, 20 or 30% from its highs, right? But again, different time frames, complete different time frames. How much of your portfolio is in VFV? None. VOO, 7% of my portfolio is in VOO. I don't hold any VFV. I don't know what it is with you Canadians, and you guys keep buying the Canadian counterparts to the S&P 500. It's it's so brutal. I don't got anything against it. I just, like I said, guys, I want US dollars. I don't want to own US assets in Canadian counterpart dollars. It just seems nuts to me. I just find it so odd, man. Like I feel like the US people think the same way. And if you live in these little bubbles of your own country, you don't want to like put your head out into another country. It's just like, if I wanted to own, say, European stocks, ideally, ideally, I would like to own them in their native currency. And I'd like to get paid in that native currency because that's the true form of diversification. You are not diversified if you own the S&P 500, but you only own it through the Canadian dollar. Because then when you sell it, you're forced out of it into the Canadian dollar, right? Whereas the Vanguard S&P 500 index, VOO, is going to pay me a dividend in US dollars. I can pull that US dollar out and I can go and spend it in US dollars. I don't get the conversions. I hate it so much. It's just like I feel like the banks and a lot of people like doing this to you because they rip you off. I mean, go look at Wealth Simple. Like Wealth Simple, I think they're finally introducing a US account, but if you buy US stocks in a Wealth Simple account, they charge you a conversion every time they pay you a US dividend. I'm like, man, everybody just looks for ways to rip you off. When you're a foreign investor into other markets. And it's so frustrating and it takes so long to set this shit up properly. I mean, I feel bad, but like, this is why I keep saying I have like 13 different brokerage accounts because every one of my brokerage accounts is a Canadian and US counterpart to it. So every one account I have is technically two accounts, right? Like my TFSA has two accounts in it. My RSP has two accounts in it. My corporate account has two accounts in it. My managed account has two accounts in it. My like every account is constantly counterparted. And it's just the wise way of doing things, in my opinion. It's just the US dollar is the world reserve currency. You can go in any place in the world and convert it, right? Canadian dollars, maybe not as easily. Wealth Simple is a complete ripoff. They are and they're not. The problem is they lie a little bit. And same with Robinhood for the fact. I mean, everyone's like, ooh, commission-free trading. It's like, no, it's not commission-free. You're getting screwed over on the spread. I mean, it's the same thing when you're buying cryptocurrency. Like, you ever wonder how they're always like, oh, we just charge you in the volatility. So if you buy it here, well, we're going to presume that this, like, as soon as it goes up, that's when we're going to sell it to you. Like, we're going to sell it to you at an offset price. That's why it's so funny that you can log into Robinhood and get a different price on a stock than you will on, say, Schwab or on like any of these other brokerage accounts, because you're not actually getting a deal. They're just charging you more than they're going to sell you the stock for. They just say it's commission free, but really we're ripping you off on the spread. So I mean, like, that's some of the stuff that I think people don't understand when they hear commission free, and it's such a huge upsell, but then they find other ways to rip you off, like on currency conversions. Like, that was the big piss off for me with Wealth Simple, was they didn't have US accounts. Oh, it's commission free, but you're a US investor. Well, too bad. You're going to get ripped. My US dollar, maybe 25% of my portfolio. So that's why I own VFV to balance it out. And again, there's nothing wrong with owning VFV. I think VFV is great for most people. And most people probably don't care about what I'm talking about. I'm just like super finicky about crazy diversification, right? Good news for investors. Vegas, no Vegas. Oh my God, guys. I'm so pissed off we couldn't go to Vegas. Oh my God. And it just couldn't have timed out any worse, because like all the shows we wanted to see, hey, guess what? They're like canceled. Adele canceled their shows. Like all these crazy shows that we would have wanted to see canceled. On top of that, I got food poisoning the day we were supposed to get on a plane. I'm like just the amount of shit that could have gone wrong did go wrong for that trip. Just the lockdowns in Canada, like everything, they're just making it brutal. The endless, like the pandemic testing here, like you need one when you leave, you need one when you come back. If you get sick when you come back, you gotta like quarantine, take special flights. It's just like, oh my God, man. What's your favorite platform? What do you mean platform? What do you mean by like investment platform? To be honest, Quest Trade's pretty good. I don't use it. I think for newer investors to get better deals on commission-free trading, let's say Canadian Imperial Bank is trying to get into commission-free. I don't use Canadian Imperial Bank, so I don't know how good the trading platform is, but I hear Quest is amazing because it's like $5, I think, for trade. So Quest Trade's good. I don't use it though. I like Scotiabank, but their customer service is shit. But they have by far like the best online platform for trading, hands down. Scotiabank crushes the online platform. TD does a really good job, and Royal Bank is shit. And I've used all of them, all three of those banks. I know what they all look like. I think TD does a pretty good job, but you're getting ripped off on commissions. And by far, Royal Bank is the shittiest bank that I'm using for trading, because I run my corporation through Royal Bank, and they give me better deals on, say, credit and stuff. But they have such a terrible platform. Thoughts on supply chains in Canada, etc. The convoy, yeah, that's kind of funny. Saw a meme about all like the convoys are Karens driving right now. To be honest, it kind of makes me laugh a little bit because these are problems you're going to look back on in 10 years and laugh because those guys won't have jobs anyways. I know that's harsh and brutal, but it's true. I'm just, that comes back to the point. I feel bad because like I feel like I'm in a job right now where I never know how long this shit lasts. So I always take it as much advantage of it as I can to varying degrees. But like I was listening to a guy talk, like people are in jobs right now where they know that their job is going to be like non-existent in the next 10 or 15 years. And it's so prevalent right now to educate yourself and make sure you're like in a place of being able to pivot for your family if you have to. And I look at people in like these fast food joints, like a lot of places where automation is guaranteed to take over, like a lot of the Amazon factory stuff. Like, you think Amazon's going to need you in the next 10 or 15 years? I mean, a lot of this stuff might be replaced by like work at home. Like you put the metaverse, the VR on, and you're controlling robots in a factory. Like, why the hell does someone need to show up to these jobs? Why? Like, why do we need truck drivers? Like, all of that's going to be non-existent in 10 or 15 years. So, I mean, like, it's funny when you see this convoy stuff, because it seems, I don't know. I don't want to be rude because, like, they have jobs, they should be protected, and I get it. I get why they're kind of going up in arms, but at the same time, you're like, if we look back in 10 years, is that even going to matter? Is what they're doing right now just going to be a blimp in the radar for employment? Man, you have the potential to be like Meet Kevin. Just start posting every day at market open and close. Yeah, I gotta give Meet Kevin's. Oh man, that guy is 29 years old. He's the same age I am. He's born in the same year, and I gotta give that guy so much credit, man, because like for things to have gone the way they did for him compared to me, like if I had a better bringing, not that I had a bad bringing up. I had a great childhood. Don't get me wrong. It's just the circumstances I grew up in were shit. Like I went through hell as a teenager. Like I watched drug abuse at its worst. My best friend committed suicide in high school. Like I just saw the worst shit. And I took out a $20,000 loan at 19 to invest in a business that, thank God, kind of worked out until it went bankrupt in 2020. So I mean, like, and I just realized that like if one person could have just taught me real estate or taught me stocks, or if I had that one person around me that could just give me some insight into like, the fundamentals of business and investing, like how much different your life could have been. But you can't compare yourself, right? Like everybody's on a different path. I know, like I said, I can so respect Meet Kevin's hustle because that guy crushes it on a level that is unimaginable. The only respect that I have for myself, not comparing, is that I also have like absurd hustle. It's like the primary driver to my success. And I mean, YouTube is a good example of that, right? Like when I started my YouTube channel, I said, look, I'm going to do this for 3 years and I'm not going to stop. I'm going to try and post as daily as I can. And like, I'm not making Meet Kevin or Graham Stephan kind of money, but my YouTube channel is now making six figures after I didn't make a dollar for a year. I mean, like I just have intent drive, which is good. I mean, a lot of people around me kind of notice it and point it out a lot to me that like I'm not at my best unless I'm like constantly doing something that I feel is impactful to my life and the people around me. Um, yeah, life sucks. No excuses. This is why you got to get off your ass and work, man. The market is supposed to be passive income. So like I do so much outside of this YouTube channel that it's funny to think that like I can sit here, do all this and manage 40 clients and do 20, 30 interviews a week. Like if you looked at my schedule right now, I've got an interview coming up in 20 minutes that I'm about to bail on for this, but I'm managing like a crap ton of work in between all this. And I take weekends off mostly to spend with a girlfriend right now. Like I balance the life out where I'm doing this crazy shit all day, maybe play VR at night, hang out with the girlfriend on weekends, and then just back to the grind every week to just try and get myself to a place of comfortability. Because like this is the thing in this market. There's like two people right now that I've noticed, like these whiners and these people that are recognizing that we're in the greatest job market in history. And the whiners are the people that are working in businesses that got wrecked. Like a lot of people are in these businesses that got destroyed. They're constantly working around the government. They're complaining. They're taking government all these stimulus checks, and they're whine. The market's so hard. Everything's so expensive, blah, blah, blah. That's like the defeated mindset, man. Like you need to get off your ass and realize that we're in the greatest job market in human history. In fact, this is probably the only job market where you could ask for a raise at just about any job and get it right now. Like it's a great market. They're like, that's the thing with inflation, right? Like this is why I'm so bullish on the market is like, yeah, inflation sucks right now. But the fact of the matter is, guys, is like if you look at the jobs rate of growth in income, like use me as an example here. I was barely making 50,000 a year for the last several years. And then within like 2 years, I went from making 70K or sorry, 70K, like 50K a year, to like, I could project myself to be making 150 to a quarter million this year. If things kind of stabilize and continue to do what they're doing, which there's no guarantee, obviously, but I'm still doing phenomenally well, right? And I'm like, wow, like if the market's that shit, how am I doing this on YouTube and just is with work from home jobs? Like I'm not leaving my house and I'm making this kind of money, folks. So I mean, like, there's no excuse that you can't be doing 10 times better than you were 2 years ago because the market is such in high demand for jobs. So it's just like, why sit here and whine when you can just put some resumes out and people are desperate to get anybody in the workplace? Um, yeah, so I mean, just it comes back to the point, like, don't compare yourself to me. Don't compare yourself to Meet Kevin. It's really hard. I get jealous because Meet Kevin's the same age. I mean, I get jealous of Graham Stephan because you're like, your life could have went a few different ways, but you kind of just got to look at what you've got, make the best of it and just hustle it up because no one's going to make it better than you are right now. I feel like we're getting into too much of a philosophy talk here when I should be keeping on the stock talk. Let's check Microsoft one more time here, folks, just to see how it ended after hours. And then I got to go do another interview and I'm going to take a break. Microsoft, yeah, it's still down 7.8%. We'll see if the kangaroo market continues. I just quit my job. What do you think is a great industry to get into? We can come back and talk about the job market. Maybe we'll do a whole video on the job market. That would actually be a fun conversation. Talk about the different industries that are, actually surprisingly, I'm going to YouTube that. Is anybody talking about that right now? It would be great to actually sit down and take a look at all the different job markets and see what ones are where all the big money's being made. Because I know software engineering is huge. I don't have a degree in that shit though, unfortunately. But man, software engineers, like starting wage is like 300K a year. It's kind of nuts. I mean, you can make your own crypto now. You don't even have to be a genius to make a crypto. You can just go and make one with third-party platforms and pump it up. Let's hug it out, folks. Microsoft at 200. Anyways, I'm gonna get out of here. I'm gonna get ready for this, folks. You guys get me rambling, but maybe I'll do more live streams. Maybe we'll be more like me, Kevin, and maybe I'll join Francisco on the poker tonight. I don't know. We'll see where I'm at, but maybe we'll do some poker tonight. I know he joins me in VR now and again. But peace out, everyone. Stay cool, stay awesome, and as always, I'll catch you in the next one.